All right, let's take a look at this market picture now and see how things are faring. To some extent, it certainly has been a market that has tried to find some positivity now. No stimulus efforts still out in the United States. Perhaps a few questions being asked on that front. China coming out with perhaps some data as well, pointing to somewhat of a recovery. Whether it's enough will still be seen at a later stage. Japan's industrial output also pointing to some sense of positivity following the negative stance we saw quite some while ago with their economy falling just around 28% as well in the second quarter. But the big news is the escalation when it comes to the US-China trade war. We've been dealing with this for quite some time, and now we're back to that scenario, and it's caused a level of unease and uncertainty in the market. So you are seeing a slightly mixed picture across the board, particularly out in Asia. The biggest gainer, though, is the Shanghai Composite out in China, over 1/3% to the good there, with the Nikkei closing slightly down. But it is all positive, though, out in the European areas. 0.79% or 0.8% up for the DAX out in Germany. So they're enjoying a good day there, more than 102 points gained. 19 points for the FTSE 100, with the CAC 40 up 0.5% on that front. The positivity has shifted through to the local index as well, so we're enjoying a sense of good trade as well, but it is ever so slightly 0.2% higher up there. 2.5% higher, though, are the gold mining shares. So it seems that continues to be the shining star for this year. 6,096 points is where the gold mining index sits. A slight gain as well for platinum miners, but despite all of that, the resource 10 is still down just over 0.25% there, still sitting at 60,065 points. Industrials have gone down 0.1% there as well, with banking stocks going up 2 8/10%, which is helping to push the financials overall up nearly 1.8%. South Africa's listed properties pretty much flat across the board there. Cartrack, Afrimat and PPC going up, with PPC going up 6.4%, and this is despite that company, of course, recently putting out their results, but also noting today that they may have found a few errors in their financials for 2019. We'll get into that perhaps in just a little bit as well. City Lodge going down 8.2%. It's at R5.21 a share, with Nampak, which has continued to struggle over the last couple of weeks as well, going down 4.5%. Soho Sunday, one would have hoped that perhaps they'd see some positivity, because, of course, level 2 of the lockdown here in South Africa does mean that perhaps we'll get a little bit more trade, but that might take some time. So it is down 4 4/10%, with attack in the property market going down as well today. Sean Morrison is from IGSA, and he joins us as well this afternoon as we unpack this market picture a little bit. Bit of a mixed one. Last year we were talking about the China-US trade deal. We're still talking about the China-US trade deal, and it seems things have escalated on that front over the general market as well then, Sean.
Yeah, it's that children's movie, Never-Ending Story. this trade war. Yeah, look, I mean, it's we thought we had a secured phase 1 deal. Even a phase 1 trade deal between the US and China is not necessarily secured. When you look at now it's a bit of a tech war. You can see the US is becoming, I would say, a little bit threatened by the rise of China and their growth, particularly in the tech space. Now we're seeing these actions in terms of, further restrictions on Huawei and associated companies. The ByteDance or TikTok. It's under the guise of stopping security breaches, espionage, things like that. But I think there's also just a bit of a sort of a world superpower dominance battle going on at the moment between these two. And now you also have Trump, it's leading into election times, and he wants to be seen as being proactive towards that trade against China.
Yeah, we'll see how that goes far anyway at this point in time. $2,002 a fine ounce for gold. Yes, it's breached that $2,000 a fine ounce mark, but we've seen it a whole lot higher. Recently, though, it had fallen. Where to from here for that gold price? Are you still bullish?
I'm still bullish. We've actually been reading this one quite well, not to our own horn, but our team. Gold is trading at record highs. If you think about it, 10 years, it didn't really do too much. It retraced up the highs in 2010, and now we're seeing the resurgence in gold. There's certainly not around the world. With the trade wars, you've got banks, central banks trying to stimulate inflation, and obviously gold and inflation here. And you have risks presented by the likes of COVID-19 in the marketplace. So there's just a lot of catalysts to support gold. And when we do see equity markets rising, but we see gold also rising, there is, just to say that not everything is all hunky dory. There is a lot of risk appetite in the market, and gold is serving as that protection for investors.
So interesting also there, the oil price also not seemingly going anywhere. OPEC countries, yes, agreeing that perhaps a whole host of them have kept to their targets when it comes to the supply cuts. So we'll certainly see if that moves things about at any stage in time. But also the local currency now firmly above that 17 Rand mark. We had hoped we had gotten rid of it, unfortunately not to be though, and we're now sitting 17.40. Is the weakness here to stay?
So it's a tricky one, because when you look at things like purchasing power parity, and that the rand does look oversold at current levels, it does look undervalued. But being almost a bellwether for risk, it is subject to sudden bouts of volatility, and it does get sold off with emerging market assets. It is any types of uncertainty. So. I would say longer term, we'd expect the rand to start recovering, and I hope we could see it move back to closer to the 16 Rand 50, even 16 Rand to the dollar mark. But in the short term, it's a bit more of anybody's guess. We've had a sharp move higher, breaking above a long-term range, sitting about 17.40, and I think there's a new range now. That's probably between 17 Rand and 18 Rand to the dollar. And in the very short term, I would favour the rand moving back up towards that 18 Rand to the dollar mark. But longer term, I think we will see a normalization. When I say longer term, over 6 month plus period.
Yeah. All right, let's get into the equity space then. Sasol seemingly having to, sell off a few items to the value of around 35 billion Rand. Of course, another cost saving of around 35 billion Rand, half of which has already been done. But the next option after that is they're going to have to get a rights issue. Will that help?
Yeah, it's been tough for Sasol. They didn't have the first part of the year wasn't too bad, and then obviously the impact of COVID, and we had that dramatic fall on oil price. It's like historical lows on Brent crude. We even had some oil prices going into negative territory. So it's really, despite the obviously ongoing cost delays and cost overruns on the Lake Charles project, there's been a lot of headwinds. So the long story short is that they have a large debt pile. At the moment, they are disposing of some of assets to try and pay that down. I think they would have been able to avoid the rights offer, if we weren't hit by that sudden drop in COVID, economic standstill, and the things that have affected demand of the commodity. But yeah, I think what's going to happen from here is that the rights issue will come. Looking to raise, I think it's about another 35 billion Rand, whatever it is, on that. And so I think from an investment point of view, is that you just have to know that Sasol, where it used to be this great dividend payer, probably going to wait a few years before you start getting that yield back from dividends from Sasol.
Yeah. What about that PPC error then? It's not an error you want to really be making, especially in a tough time where you want to get investors to trust you a whole lot more. PPC making an error in their financials for 2019. Is that a big deal?
Well, the market seemed to like it, ironically. We saw it as up almost 9% at one stage today. Look, I think it was, when you make mistakes and it actually makes you money, I think the market's seeing it as a positive. It's just restating some of the impairments in the business, and also some of the foreign exchange translations. But the net result is that their headline earnings are going to be higher. I think their headline earnings were stated at 20 cents per share, and now it moves up to 23 cents per share, even though basic earnings are down because of the increased write-down. But the actual core business, the headline earnings, which displays that, is going up. And then, 20 cents to 23 cents, it doesn't seem like much, but it's what 15% improvement. So yeah, it's not ideal. It's not ideal when you have sort of mistakes, but it wasn't. We're not assuming that this is a fraudulent activity or anything like that. This seems to have been a mistake, and it has been corrected before the full results have been released. And so, so it's only positive. Earnings are more than what they thought. But that being said, the company still needs to restructure, and it's not in a great space.
No, certainly not. Sean, appreciate the time, though. Thank you so much for that. Sean Morrison is from IG South Africa there, helping us unpack that market movement. We take a short ad break now. I'll be